The Johannesburg Stock Exchange, JSE, is Africa's most important stock exchange. The JSE has 442 firms listed, and they are denominated in South African rands. The JSE had a market capitalization of $1,005 billion as of August 2020. South Africa's economy is the continent's second biggest. It is nevertheless the continent's most industrialized, technologically advanced and diverse economy. South Africa is one of just 8 nations in Africa with an upper middle income economy. In 1996, when international sanctions were lifted after more than a decade, South Africa's gross domestic product has nearly quadrupled, peaking at $400 billion in 2011, but has since fallen to below $283 billion in 2020. Within 2 decades following the end of apartheid, foreign exchange reserves rose from $3 billion to over $50 billion, resulting in a diversified economy with a rising and large middle class. State-owned companies, SOEs, play a major part in the South African economy, with the government having a stake in roughly 700 SOEs in a variety of industries. In 2016, inefficient government bureaucracy, restrictive labour regulations, a shortage of skilled workers for some high-tech industries, political instability and corruption were the top 5 challenges to doing business in the country, while the country's banking sector was rated as a strong positive feature of the economy. The country is a member of the G20 and the only African country in the organisation. The arrival of Dutch immigrants in 1652, originally dispatched by the Dutch East India Company to construct a provisioning station for passing ships, marked the start of South Africa's official economy. With the advent of French Huguenots and German immigrants, the colony grew in size, and certain colonists were given the freedom to pursue commercial farming, resulting in agriculture's domination of the economy. The colony was acquired by the British at the end of the 18th century. This resulted in the Great Trek, which pushed farming farther onto the continent while also establishing the Transvaal and Orange Free States as autonomous Boer republics. Diamonds were discovered in Kimberley in 1870, and some of the world's biggest gold reserves were discovered in the Witwatersrand region of Transvaal in 1886, rapidly changing the economy into one dominated by natural resources. As a result of the Boer War, which saw Boer women and children imprisoned in British-built concentration camps, the British seized the territory. During this time, the country began to industrialise, which included the formation of the first South African labour unions. The government avoided using economic populism as a strategy. Inflation has been reduced, governmental finances have been stabilised, and some foreign money has been recruited. However, the rate of increase remained low. President Thabo Mbeki pledged at the start of 2000 to stimulate economic development and foreign investment by loosening restrictive labour regulations, speeding up privatisation, increasing government expenditure, and slashing interest rates significantly. Organised labour was a vocal opponent of his policies. From 2004 onwards, economic growth accelerated substantially, with increases in both employment and capital formation. In April 2009, amid fears that South Africa would soon join the rest of the world in the late 2000s recession, Reserve Bank Governor Tito Mboweni and Minister of Finance Trevor Manuel disagreed. Whereas Manuel predicted a quarter of economic growth, Mboweni predicted further decline. Technically, he said, that's a recession. During the global financial crisis of 2007-2009, Nobel laureate economist Joseph Stiglitz advised South Africa that inflation control should be a secondary priority. Unlike other developing economies, South Africa struggled to recover from the late 2000s recession, with private and public consumption growth driving the recovery, but export volumes and private investment have yet to completely return. Under the present policy framework, South Africa's long-term potential growth rate is predicted to be 3.5%. Per capita GDP growth has been poor. The government and the majority of South Africans regard high unemployment, over 25%, and inequality to be the most pressing economic issues confronting the country. These problems, as well as those related to them, such as crime, have harmed investment and growth, resulting in a negative feedback impact on employment. Crime is cited as a serious or very severe barrier on investment by 30% of businesses in South Africa, making it one of the top 4 most commonly cited restraints. In 2017, political tensions in the country erupted after President Jacob Zuma fired 9 cabinet members, including Finance Minister Pravin Gordhan. The Finance Minister was viewed as a key figure in efforts to re-establish trust in South Africa. S&P Global downgraded South Africa's credit rating to junk status in April 2017 as a result of the tensions. Fitch Ratings followed suit, downgrading the country's credit rating to BBB-, a sub-investment grade. In the week after the government reshuffle, the South African rand fell by more than 11%. Non-residents are subject to capital gains tax only on capital gains from the disposal of certain South African property, but a tax on the sale of shares can be subject to tax in your home country. Equity research on the South African market can be done with the Statistics South Africa website. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.